Hello everybody, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Friday, March the 11th, 2022 with a live Forex trading market analysis for you. Before we get into it, we just want to remind you with our disclaimer that this video is for illustrative and educational purposes only. Alright, with that, let's go down and just remind you also of the book, High Probable Japanese Candlestick Patterns, written by yours truly. It's available on Amazon.com in both paperback and Kindle versions. And if you have not done so, please hit the subscribe button to Forex Trading Unlocked on either YouTube or Twitch. And make sure to tweet out and pass this video on to your friends as well. Alright, from the live action screen here, we have the Forex-Trading-Unlocked.com website pulled up. We already pulled up hit our workstation tab. We're going to toggle down past the numbers, and we're going to just go right to the Euro US dollar chart here. Now, while we're doing this stream, if any of you have any questions on either of YouTube or Twitch, you just make sure to go right ahead and chime right in on the chat. So we'll either get to a market that we're not covering right now and get to your question, or if you have questions about any market we are going over right now, we will try and get that answered as well. So, and let's see what we got going on here. All right, so the Euro US dollar, as you can see, is hanging on its lows right now. The market over the past two sessions, it came off of a lower move high and now is hitting support rather hard. So the question is what is going on here? Well, I think everyone's aware of what's going on with the environment throughout the world right now. It's kind of hard not to know what's going on, right? So, and the big question is, where are we going to go from here? So the big question about that, big answer to that rather, is we are going to have a lot more volatility to come. I think we have a short-term, good, solid rally going on with the dollar index, but there's a lot of indifference and divergence forming as well. So we will be very mindful of that and go as we go through these different currency crosses. Okay, so with that being said, let's go and see what's going on here. So we have this recent high here, and we have this recent swing low here. So as you can see, we failed to make it to the 50% mark right here as far as a retracement off of this current slide that we have from February into March. Now, does this mean that we are done making a run at resistance? Not necessarily. However, I would be mindful of the fact that you had this current low here that's just below this 111.55 area. This is where support now has become resistance. You can see that we have been making lower move lows, lower move highs. That is indicative of what? It is indicative of a bear trend. So as far as how far can we go to the downside, well, we had already predicted this 108 to 109.5 down into the 108 region already a couple weeks ago. And as far as the extreme, if this is going to start to bottom out, 107.5 would be a very historically strong area, somewhere between there and 108 even, where we just came off of this newer move low. The reality, though, is that this Russian thing is not going away with the Ukraine. We have a lot of we can say that we're putting all these sanctions on Russia, but at the same time we're putting sanctions on ourselves. So this is a very complicated web. So let's just figure out what's going on technically, because fundamentally we know where the market is overbought or oversold and is going to continue to be so. I would say for at least the next 6 to 9, 12 months. That would be even if we were to subside things. The cooling down period for this is going to take 6 months to a year, and we're not even beginning at that stage yet. So let's be mindful of that. Look to sell rallies in the Euro US dollar right now. So coming off of this, we are looking for a continued test of support down to challenge or test this low here that we made a few sessions back. I do believe that you have to be mindful of the weekend trade. The dollar is a bull right now. These other currencies, especially the euro and the pound, are bears. There's no reason to think that this trend is not going to continue, but be mindful of these big swings. You get some of your biggest rallies in a bear market and your biggest breaks in a bull market. So remember, be very mindful of corrective moves that are going to occur as we continue to trend lower. So just as you can see how we came off this 108. I mean, look at this. If you look at the range that we had through from December, we had basically a range of 112 even up to 113.87. So not even a $2 range. Okay, that was over the course of from the end of November going all the way into the big first week of January. Now we have 108 all the way up to 111.20, almost 112, or excuse me, just above 111.20. All right, so that's a $3 move just in the period of just 3 sessions. From here, you were set your low here, 1, 2, 3, set your lower, move high. If you think about that as far as volatility, it's a lot of action to occur in this market. So be mindful once again of the spike rallies. We are bearish over the longer term. There's nothing to even remotely think that fundamentally we're going to shift that that rationale at all. All right, so we know we're bearish. We have we're looking to sell rallies here. Let's look at the British pound US dollar. All right, so we got a like there on YouTube. Thank you very much. Make sure you so all the rest of you out there watching, if you don't mind, we sure appreciate the likes. And don't forget to ask any questions if you have any as well. All right, British pound US dollar, as you can see, this one's getting hammered as well. This doesn't look like it's going to stop anytime soon either. I would say that the fundamentals with oil being strong, that helps the pound, gives them some support. But we do have a Fed meeting going on next week. So we already know that the odds are very, very unlikely that the Fed will not raise rates on Wednesday. The odds are already priced in that there's going to be a 1/4 of a point. Do I think that they were going to jump and do a 1/2 point? Not at all. I can't. This is not the Volcker age. This is not the kind of Fed that we have in place that would do such a thing, as far as I'm discerning and thinking about. Especially because they've waited so long to react on raising rates in the midst of a global conflict that we have right now and global sanctions, and we're coming out of the pandemic. Now we're setting up a whole new economic pandemic. So that being said, I believe that you're going to see a lot of flight to quality in the dollar, especially as the 30-year Treasury bonds start to put on a slide. So that's a very interesting thing going on right now in the market. And there's something else you have to pay attention to is the interest rates. So as long as the 30-year bond and 10-year Treasury note continue to trend lower, they have had a nice little spike rally going on over the past week. But be mindful that has more to do with what's going on in the Ukraine than it does have to do with anything else, meaning that those are rallies to sell. All right, so with that being said, we can say that the pound, after having successfully made heavier lows here, now it's not being as radical as it was over these sessions here. You look at how much we had a drop off from $1.33 down to $1.30, basically $1.31 on the course of 2 sessions. Now we chopped around, and now we're trying to bang support some more. So are we grinding out a low right now? I think that as we head into the weekend, unlike the Euro US dollar, the pound has probably pretty much, I think, hit the support for the day. I don't think it's going to really strike too much lower. Now be cautious holding these positions into the weekend. The overnight moves that we are having now are pretty extreme, so it wouldn't be unlikely to see the British pound US dollar squeeze a lot of shorts out on Sunday night and be all the way back up at this 31.5, maybe even all the way up to 32 even, and then crash lower next week. So there's a lot of things that will be unfolding in the news. There's, as far as our tensions going to subside between Russia and the Ukraine, or globally, I would be stunned beyond belief if they actually did over the weekend. Not to say that it could not happen, but it's very, very, very unlikely. All right, let's see. Do we have any questions on the YouTube? We don't have any questions there. Do have a like, thank you. And okay, so nothing over there. Okay, you guys are quiet, but it's Friday. Probably a lot of you guys are already done trading for the week. So, all right, so we have the British pound US dollar. Now, as far as how much lower can we go, let's go back to the monthly. So on the monthly basis, we're only a week and a half into March. We have made monthly lows. The trend here is obviously bearish in the short term as far as going on a monthly basis, but otherwise you can see it's pretty neutral, you know. So now the question is, are we going to start to find support or not? The euro, I think, has the hardest problem finding support over the next few sessions to the next couple of weeks. The pound US dollar, I would use caution. It wouldn't be out of the realm of possibility to see this one snap back very quickly. All right, so let's see on a longer term basis, where are we at? So 50% and 0.618, we'll put that right here. This is for the monthly. Okay, let's get this to make this a little clearer. So if we drop down into this area, as you can see, there's a nice little bottom, or a nice little pivotal area around here. So I would say look for support somewhere in this zone here. Should we fall below 125.08, that would be very negative on a major monthly scale. Remember, we are coming off a lower move low down here and a lower move high. We never did take out this level. So this is the key area below this monthly high. It goes back to June of 21 of last summer. All right, so looking to bottom somewhere in this area here, find some support over the next couple of weeks. I do believe this is pretty much the extent to what you're going to see. I can't see why, with the rising price of oil right now, that we would find the pound getting below this area. I know there's the interest rate factor with interest rates going up in the US, but don't kid yourself, the Bank of England is also going to have a policy on that as well moving forward. Less quantitative easing and blah, blah, blah. So that would also neutralize the interest rate trade. So the oil trade, unless we start to pump oil in the United States again at the rate that we were before, there's no reason to think that this market is going to continue to trend lower in a major way over the next 3 to 6, 7 months or so. US dollar CHF, let's see where this is coming in at. Now this one is, talk about chop suey. You can see it on the monthly basis here. Now let's go to the daily chart. All right, boom, up and away. It looks like it wants to break out to the upside. The dollar, US dollar Swiss, could it be going to parity? Is that possible? Well, anything's possible. I would use caution right now. I think that you have a major dollar rally going on because of flight to quality. Since there's no reason to buy the bonds anymore in front of the Fed meeting, dollar is where you're going in front of the weekend. There's all the reason to, especially with the breakout with the US dollar yen, which we'll get to next. That's showing a lot of strength in the dollar versus all of the major currency crosses. Now, we're going into a weekend. I would expect that instead of seeing follow through on Sunday into Monday, or Monday from wherever we settle today, which right now would be dollar strength, dollar bull, I would expect that you will have a pullback on the opening session. So don't be surprised if the market settles around here today, and then instead of going up and blasting the new highs, which it may do, but I've got a feeling that somewhere on Sunday going into Monday, it's more likely that you'll see it back down in this area here, maybe even coming back and testing the lows from today before it makes another run at resistance. I don't see it screaming through this area. There's a lot of reasons where the Swiss also is a flight to quality currency, so to have a runaway rally with the US dollar Swiss, the only thing I could see that would really propel that would be if you really see the pound and the euro getting striking support very heavily in Sunday into Monday, Tuesday's trades. If you do have that scenario going on, then I can see where the US dollar Swiss has the potential to get up beyond that 93.5 level that it's floating below right now, up towards 94, even 94.5 actually, within a very short amount of time. Now the Swiss does have a lot of volatility here. It's been quiet like the other European currencies, especially the euro, on many days, but when it has moved, this one seems to have a better average true range than the euro has for quite some time. Now, there are discrepancies, obviously, on certain cases. However, that fact that is going on tells me a lot about where is the liquidity. So there's definitely more liquidity in the US dollar Swiss there's a lot more potential for trending, which the currencies, that's why we love the currencies, because they trend so often. The average market out there, no matter what it is, trends only 30% of the time. 70% of the time it's going sideways to nowhere, versus the currency markets, which typically trend 70% of the time and are only going sideways 30% of the time. Now, obviously, there are exceptions to this rule, but as a whole, and the average for that quadrant of the financial derivatives markets, this is something that stands true. That's why we like trading Forex. There's not that there's anything wrong with the futures or equities or anything like that. I'm a big fan. I've been involved in all those things over my course of my career, and I still trade only stocks a little bit. Most of them are just investments in retirement. Options is how I play the equity markets for the most part. And then with futures, it depends on where in the stage of the roll, and depending on how spreads are moving, it's a little more complicated of a trade. But I still do trade the 30-year and 10-year interest rates. Every once in a while, the S&Ps as well. Currency futures that I do dabble in, but it's tough with the weekend trade, so it's usually an in and out during the week sometimes sort of situation. All right, so US dollar Swiss. Do we have any questions here on the chat? Nothing on Twitch and nothing on YouTube, but at least we got the like. Well, okay, well, it's a quiet Friday. That's what I kind of expected, so we're going to breeze through this one now. US dollar JPY. Let's check out what's going on here. We're like a balloon underwater. We've been talking about this thing going to 122. 117.5 has definitely been a target of ours for a while, but it's been going sideways. It's just that obviously the last 5-6 sessions it's been rallying, but it's been going sideways for months. Been sitting on this position since December, holding longs, picking away at it every once in a while, taking a little profit, and then luckily I've had a chance to buy back in a couple times, so I've been nibbling at it, but that just kind of makes up for the interest from the holding the contracts. So, but today's move to the breakout to the upside, that is a wonderful thing, capturing once again part of that overall trend, which you can see just on this chart since December. We can make consecutive higher move highs and higher move lows, and the nice thing about this is even if we just go back to here, the trend line is on a very nice slope. It's kind of like around a 45-degree slope, which is very solid whether you're going up or down in trend. To somewhere hold that kind of a baseline is very good. It's very sustainable. Unlike when you have something, say for instance like this, which is super vertical in slope, so that is hard to maintain that trend. So by attrition, we should fall through this even if we just go sideways in the market, not meaning that it's bearish, but it's just smoothing out the trend, which would then bring it back towards this 45, where you would have a lot of support. So US dollar yen, what do we love about this? Oil prices are up, interest rates are going up, US dollar strength. Now we're looking to ride this baby out. Now 122 is definitely an intermediate term target that we've had. Now this was before the whole Ukrainian conflict. So 122 is definitely a target for us, and you can go and see how my interviews have been over the months on tfnn.com or any of the past videos I've done for Forex Trading Unlocked. So this is something that is not new, not coming up with it today. A lot of the gurus out there, they've been chasing me for a while when it comes to oil and everything else. It's amazing how all of a sudden numbers that I've been spitting out for months and telling you around the time frame that would emerge as well, now all of a sudden they're coming out and following out, chasing my coattails, which is nice. We had a good laugh about that on TFNN a couple weeks ago. Just like Mark Twain said, if no one else is going to say, pat you on the back, pat yourself on the back. So anyhow, US dollar yen, very bullish. I would be looking to buy dips. If you are trying to sell into this thing, I would be very cautious. Keep your stops tight and expect to get run over. I would look to buy dips more than try and sell rallies currently. Right now, the market is trending higher, higher move highs, higher move lows. Once again, that is a bullish trend. Don't fight it. As far as corrections, I would use a lot of caution trying to pick off a correction in this market. I would take advantage of any type of corrective move to use it as a buying opportunity. As far as where could you get back in, if we were to dip back below 116 to this 115.5 area, even down to 115, I would say that would be a tremendous area to get long and look for an extended play to the upside. Now this is a creeper rally. This thing is not just blasting off. But as you can see from the beginning of 2021, this goes from Biden coming into office. This is riding the oil trade right there on its own. And now we have the interest rate trade. So for us to continue to gain strength versus the yen, and I want you to be very mindful of this. The dollar index is due for a nice little correction, and a lot of things can happen with the way we've been putting on these restrictive embargoes on Russia and the implications. There's a domino game that's going on right now, and they're already falling. The question is it a pattern that we think we set the dominoes and they're going to fall our way, or is it somebody else set the path and things are going to go not as we are planning? I would say that is the latter is more likely than the former. And especially right now with, like I said, if we can get this Japanese yen back up to this 122 area, that's a big deal. I mean, look at this. On a monthly basis, we've been going side. We had a nice downtrend. Here's our breakout level right there. And now let's look at this. Alright, so if you look at the longer term trend, we go all the way back to 2015. This is back when Biden was the vice president, not the president. Now during that time, US dollar weakness definitely came into play for a little bit. We had a nice big sell-off here into 2016. And then we had a lot of strength and neutrality as far as the US dollar yen. This all based. But it was leaning towards the downside. The dollar was under a lot of pressure. Inflation was at bay, oil was down, interest rates were very low. They were at the bottom, so all these long-term variables that influence currency pricing were in a totally different situation than we are now. Now we have oil that is, now it's five times higher than it was, just a year and a half ago. So, and then you have the interest rate environment, which I know you're like, here he goes again. Every single market keeps reminding us about the interest rate factor. Well, I have to, because that's part of what's going on here. So you can see that on the intermediate term, we broke out to the upside. This is now after setting a higher move low and higher move high. We are neutral to bullish on the monthly. Okay. Then we go to the weekly. Obviously, on the weekly, we're even making higher move highs and higher move lows. Key thing to take into account is, boom, we took out that high at 116. This is a big breakout level now. This becomes our support pivot. Now you'll notice that we spike higher, and then all of a sudden it kind of evens out. This is a grind of a trade. Remember, this from if we go back to January of 2021, okay, so when Biden took office, we look at the low, we're looking at 102. So that the yen has gone up 15 basis dollars in that point, and basically in, well, not 15 months, but in 14 months. Very close on that scale. Also, if we look at something here, remember how we drew the trend line for the slope? Here's another one. It's just, this is closer to the 45 right here. Talk about a nice solid trend channel that is going higher. Obviously, it took until March of 21 to confirm a breakout to the upside, which locked in this higher move low, or lower, excuse me, lower move high, then a higher move low, which then was followed by higher move highs and higher move lows, confirming once again the bullish trend. So we have it on a fundamental basis, without any indicators or whatever. The overall picture for this market is bullish, bullish, bullish. This means that even if the dollar index takes a dive, even if the euro has a huge rally and the pound have a huge rally and the US dollar Swiss collapses, don't think that the US dollar yen is going to do the same. Before we had COVID and going into COVID, the one thing that was really true about the US dollar yen was when the dollar was strong, it was actually weak versus the yen. And those are pullbacks to buy, whereas all of a sudden the euro and the pound were just really ripping into the dollar. Then they lose momentum. There will be a correction in the dollar to the upside, meaning the euro and the pound and these other major weighted currencies that have the biggest weight in the dollar index would start a correction, and then what would happen? The US dollar yen, the bulls come back. So the dollar's strength has not left the yen, as you can see now, for over 2 years. Okay, so now that's a big thing to pay attention to, all right, when it comes to this trend. So yes, I am very bullish to US dollar yen. All right, Australian dollar, US dollar. Let's see where we're at here, folks. All right, Australian dollar, US dollar. This is Swiss cheese right now over the past few sessions. However, we have rounded out a bottom. I would use caution right now as we come out of COVID and with the pricing of commodities. This is most likely the low here in the Australian dollar for a while. Now remember, we made a lower move high over here just a little, not that long ago. All right, so we go back to February of last year. This 80.25 is our upside target. Now right now we are smoothing out a higher move low. I don't want to pick a bottom from a couple months ago, but it's very possible that is in place. So if we go from here off the low, now this is a little bit steeper than the 45. So remember, by attrition, we could take out this channel. It doesn't mean necessarily that we're going to have a big slide. Also, we could have still a nice correction. So let's see where we're at right here. Okay. We got the 50% and the 0.618. Are we going to get down into this area? Probably not. Reason being is that this is the 0.382. When you have corrections that are counter trend corrections, you look to really find a move that would fall into this 50% to 0.618 area. Okay, now if you have something that finds support around the 0.31 or 0.312, that's the area code for Chicago, 0.382, excuse me, folks. This is indicative of a change in trend and a solid momentum that's in place for that trend, meaning bullishness, meaning a lot of buying pressure is coming in at this area. Does that mean that it's going to hold and it's not going to fail? No, it doesn't necessarily. But right now, if this market is solid, if it has made a nice turn, which we know on the long, it has made a turn for sure, obviously, because it bottomed in 2020. But the reality is that the correction is over. This is not a correction to the upside, but rather this was a low. This is a lower move high right here. Let me get rid of this because it's a little distracting. So see how we had this lower move high, lower move low. This is the bottom of the trend. This is a lower move high, which would keep the trend intact if it was going to really continue lower and lower and lower. Or this is the first lower move high before a higher move low is established. So that's the key right now is this a higher move low that's solidified that's now going to take us up to higher levels? Right now in the short run, I would say that's very, very likely. Now, in the since we've been trading since the end of January, as you can see, we had bottomed, higher move high, or lower move high, higher move low, and then we have consecutive higher move highs and higher move lows as we trend higher. So what do you want to watch out for? I would say if we take out the low from a few sessions ago here, right around 72.5, that would be a short-term setup to have us pound support. I would look to buy breaks in this market. I'd be very fearful of getting caught short the Australian dollar, US dollar, meaning that, and this is where you have divergence, where the euro and the pound could get nailed, so can the Swiss, where the dollar is very, very strong. And remember, they're the biggest weights in the dollar yen, or euro and the dollar, and the pound and the dollar. Those two cross rates right there are the biggest weights in the dollar index. So that can move that index, and then that indicator is no longer a solid indicator when you have divergence, meaning that Australian dollar, US dollar is going to have strength in the Aussie and not in the dollar. You'll have a reflection of that in the New Zealand dollar as well. So it's going to be a breakaway currency. So this is another reason where the dollar index, like as I said, the US dollar yen is also in divergence too, meaning that when the dollar's strength is there versus the other currencies, the yen's gonna rally and maybe have its pullbacks when you have the opposite. Now, when you have dollar strength once again in these other currencies, expect that Australian dollar is not going to be too severe. Now, remember, the pound and the euro, those, and even the US dollar Swiss, those are all making new move lows versus the dollar on the short run. Australian dollar is not. It made a higher move high a few sessions ago, made a higher move low, and now it's right in the middle. It's down on the day because of dollar strength, but it's not really very strong. So I'd be very mindful of that and use caution to sell into Australian dollar, US dollar. Once again, I would look for buy points, not sell points. Let's see, do we have any questions on YouTube? No. Oh, yeah, we've got another like. Thank you very much. We appreciate all the likes you guys have. And if you haven't subscribed to our YouTube channel or our Twitch channel, please do so. Let's see, we got another extra couple viewers here on Twitch. Thanks for joining in. All right, so once again, Australian dollar, US dollar. We noticed that that's the bull going on. New Zealand dollar, US dollar. This one is a bit in tandem with the Australian dollar, but you can see that the volatility is not quite the same. I would expect that volatility will remain about the level where it's at in the New Zealand dollar, US dollar, and I would expect that it's not going to be in complete tandem, but will trend very similar to the Aussie. Their restrictions on COVID are a little bit more severe. Still, while Australia is opening up not only its borders to its own citizens and stuff. I mean, I know somebody from New Zealand who is now going home for the first time in 3 years to see his family, which is, I can't imagine what it's like that, where you really are restricted from going home. This one, I think, is going to, it has the same scenario as the Aussie, but not quite as strong. So I would look that while you're going to have, when the Australian dollar breaks out to the upside and pierces resistance, I think you're going to get a little momentum here with the New Zealand dollar, US dollar, but not quite as strong. But the sell-offs are not going to be as extreme either. As you can see from today, the volatility here is a little bit tighter. So a little bit more reserved as far as where your bang for your buck is. You definitely have a little more, I would say, reward to risk ratio going on with any Australian dollar trade right now. Now, should New Zealand politically start to backpedal a little bit on their restrictions sooner than later, then you might start to see the average true range lift in these currencies. But right now, currently, we do not see that lifting. All right, now let's go to the US dollar Canada. US dollar Canada, this one here is falling through support pretty heavily. Now remember, we saw dollar strength elsewhere, and we have been making higher move highs and higher move lows. This is a tough one. Canada, for some reason, I mean, I just, on every any of you who have been listening to me and following me for a while know that I just, for the past year, have been so confused how our administration in the U.S. and the administration in Canada can't seem to have any honest meeting of the minds, especially because they seem to be on the same page politically, which I don't get either. But it's the fact that they can't come together on the energy situation is just mind-boggling. It's bumbling. But anyhow, to get back to where we're going with the U.S. dollar Canada, expect support to keep on getting hit. Oil prices going up only benefit Canada. They don't benefit us, but that kind of neutralizes the trade. But since they're an exporter, that benefits them, especially at these levels. The interest rate factor also, is going towards the dollar. I don't know when the Bank of Canada is going to start to pull the trigger as far as raising rates. So when you look at those two things together, it doesn't look really good for the U.S. dollar Canada. Now, it's been going sideways for the past 6 months, really. It's obviously coming off of a higher move high. The question is, are we going to hit a higher move low? I think we're coming to the friction point, because this high back here is key at 129.64 that we set back in December. Should we get above this area here on a monthly basis, you can see that would be a breakout to the upside. The overall trend of this market, though, has been lower. Okay, so the question is it sustainable or is it not sustainable? I think that if we fail to make a run for resistance, we will be coming back down towards these lows, which would be down around 122. So be very mindful of what's going on here. This is a key low that we set a week and a half ago. Any trading below 125.88 will have this market in a world of hurt, mainly because you'll be coming off a higher move high and making a lower move low, which locks this market into neutral. You can see it's pretty much in a sideways trade on a daily basis, even on a weekly basis, but it is definitely heavy. So the question is, has it run out of gas? Once again, I think this is where you find the solid divergence, where the US dollar is going to be strong versus the euro and the pound and the Swiss, but not against the Canadian dollar. This is be another one. It's going to be a free floater. So remember, US dollar yen, long-term overall bull, unless we have major changes geopolitically. And then US dollar Canada, unless we have a bunch of energy changes, I don't see the strength coming in. Now, there is something that could, what variable would strike it up? Well, buying more foreign oil is not going to do it. Buying oil from Canada unnecessarily is not going to do it. What would do it is if we started to produce more in this country and turn the pumps back on to the levels they were, or even close to where they were before Biden took office. Should that be the case, then U.S. dollar strength would come in on this market fundamentally, and then, well, as long as oil stays at a higher price. If oil drops significantly, then it may wash out that factor. But I would say that should there be a change in tone on energy policy in this country coming out of the White House, that would spark a big U.S. dollar Canadian rally. It would also accentuate any rally in the U.S. dollar yen as well. Okay, now let's take a look at the Btc Usd. We got to look at a couple cryptos here. We definitely had some questions about that from some of our other followers. All right, still no questions. You guys are watching. You got leaving some likes. I like that, but no one's leaving any questions. All right, well that's all right. All right, BTC USD. What's going on? Well, over the past few months, it's pretty sideways. It looks like it's staged for a breakout. Maybe not. Let's see. This high from a week and a half ago, 2 weeks back. That's something you have to watch out for. This recent swing low from a few sessions ago is very big. Now everyone's getting all bullish on Bitcoin and cryptocurrencies because of what's going on in the world, and now the new Biden announcement. I would say that's more fluff and puff than anything else. I wouldn't take any stock in this, what Biden's little research thing he spoke about, because it's going to take a while to pan out, and it really doesn't mean anything in the longer run. So the question is, are we rounding out a bottom? Well, we made this low here, and we had a lower move high, higher move low, but we have a lower move high here. So this has us locked in sideways. So we are looking for a breakout of either this last lower move high, which would confirm strength and take out this downward sloping resistance line. That would be an indication that we may see some follow through to the upside finally in the Bitcoin US dollar trade. If we fail and take out this higher move low that we had set a few sessions back, then I would see us hitting this upward sloping support line very quickly, and I would be very leery of strength in the Bitcoin US dollar for at least a few sessions should that occur. If we start to bang on support, it wouldn't be out of the realm of possibility that we could really take things out. Reason being is that higher move high, higher move low, higher move high, higher move low, higher move high, higher move low. If we start to hit support and we come down here, well, then we're coming off of a new trend, which is bearish. If we go from the high that was set, and you look at here, we have a higher move low, lower move high, lower move low, lower move high, and now we come into the chop fest, which is the past few weeks. So we're waiting on a breakout here. I would look to, should we get a rally, that would be a nice little acceleration to Bitcoin. I would expect to see a very strong short-term spike. I wouldn't say that this is going to be an extended long-term momentum for Bitcoin. Now, if we start to bang support, I would use a lot of caution, because if we start to fall below $37,000 and then start pressuring 32,000, 33,000 level, well, we'll be back in the 20-something thousand area very quickly. Would that be a good buying opportunity? Yeah, I think anywhere from 32,000 down to 22,000 actually would be a great buying area for Bitcoin. But I would use a lot of caution buying at the levels where they're at right now. And I would look to take some profit on any upside breakout. There's a lot of things that are coming into question when it comes to cryptocurrencies globally. So obviously they're entrenched now in our financial system as well. And this is something that we will see how this really impacts us. I've been saying for a long time that a systemic shakeup in the markets, we're ripe for having a disaster the more we integrate cryptocurrencies, especially through derivatives markets. And the reason I say this is for those of you that are out here that are only Forex traders. I mean, like my background is trading pretty much everything. I started the CBOE and then the CME and then the Board of Trade. So what I would say is that when it comes to what type of systemic damage we could have, that is going to be disastrous. It's growing by the day. We have the futures on the CME for Bitcoin and Ethereum. The margins are just so extreme, and the potential for margin calls just from the futures derivatives is just insane. And you'd have to assume that a lot of these funds that are starting to buy bulks of cryptocurrencies, they have to be using the futures and options markets as some sort of a hedge. Well, I would assume if they're not, then they really are inept into the trading business. So, and not that the net longs are not going to profit in the short run or maybe even the long run, but there's a lot of reasons why the crypto space could have a really tough time over the next year, especially as we have all these sanctions. You got to realize that the more sanctions we put on, there's people that now they have all these crypto spots, but they can't get to their cash. So they can move it around from crypto this to crypto that, and there's different wallets around the world. But as far as getting their hands on the cash and converting it, that's going to become a problem. So if that becomes a problem through these sanctions, then I would say that the price of Bitcoin is going to diminish greatly. Now, does that mean it's going to happen to all cryptocurrencies? Absolutely not. I look at the Bitcoin at Bitcoin as kind of very similar to the dollar index. You've heard me say that before, all of you that follow me. But it's not. It's not an index, but it is very similar in the sense that it is the big dog in the crypto space. It is the trend. It is the trend setter for the industry and for the sectors. The question is on any given day, what's going on. So the more we have geopolitical tensions, I think that the risk once again of a systemic shock because of cryptocurrencies and the funds is very, very likely. When is this going to occur? I think you're going to see a lot of it happen over, not in like 2-3 years from now, but probably sometime within the next 12 months, where it's going to start to really, really impact things. And we'll see. I hope I'm wrong. I really do. But the more we have derivatives on derivatives and they're over leveraged, and then once margin calls start to come in, it forces liquidations is what it does. So then it doesn't matter of whether you're on the right side, the wrong side, what your thoughts are with any of the different crypto markets or any other markets for that matters. When you have these margin extremes that all of a sudden start calling due, funds blow up. There's a heavy weight in certain derivatives where they're forced to liquidate positions. That forced liquidation causes a lot of volatility in the spreads and also liquidity at different levels, and that's when it's really dangerous for smaller traders and you end up getting hurt. All right, let's look at Eth Usd. All right, this one here, as you can see, going kind of sideways. We're looking for a breakout to the upside here. Pretty fair value for where it's trading. You can see it's very tight, so it's solid value right now. I think if Bitcoin does pressure support, it'll be very likely to see a little follow through to the downside with Ethereum. But Ethereum looks like it's basing. And once again, just because Bitcoin sells off doesn't mean Ethereum has to. This technology is very viable. And especially at these levels, it's a very good price point. As far as hitting this market into support, I think that you can still see a spike lower down towards that 2,200, maybe even 2,000. I would expect it to be a spike, though, very similar to what it was here, very similar to what was here. If you read the book, High Probable Japanese Candlestick Patterns on Amazon.com and Kindle and paperback versions, this low right here, as well as this low right here, you can identify those signals from the book as far as being short-term buy signals. Now, do we have a buy signal or a sell signal going on right now? Nope, no, we don't. We don't have anything at all. So as far as what we're going to do with this market and what our synopsis is to wait. If you're long Ethereum right now, I think you're in a very good buying area. I would look, if we do have a breakout, you got to realize this is a pretty nice trend that we've had here. Now it's very steep as well. So for us to have a nice corrective move to the upside, it's very, very easy to do. So we could use this here, but that's kind of a spike. So let's use this. All right, so here's a nice slope keeping this trend intact. Should we break out to the upside here, I think we could find ourselves getting back up to the 3,600, 4,000 level. Now, if we play with support and like Bitcoin takes a dump and so does Ethereum, then look out below, my friends. We'll have a good chance of hitting it another $300 to $400, getting down towards this $2,200 to $2,000 level. Once again, I do not think you're going to see as much of a sell-off in Ethereum. Now, Monero here, this one's chopping around to the downside, but it just came off a higher move high after a higher move low. Could this be the trend setter that sparks the rally for all the cryptocurrencies? No, it's not Bitcoin, it's not the index or what have you. But this shows us how we have divergence. And it also could give us a reason why Ethereum is probably going to be supported, and obviously Monero has a good chance of finding support where it's at right here, even if Bitcoin does not. So as far as a base, I like Monero where it's at right now as a pricing, especially anywhere where it's at now, down to 140. As far as going to the upside, I don't see it's going to like $600-700 anytime soon, but I like this 140 to 220 area as a buying zone, and then selling it out around somewhere between 280 and 350. Especially if you can get it anywhere around that 290 to 310 sweet spot. That would be a nice place to unload a little Ethereum, because long term, I see this as a nice a nice range trade that takes over to long term, meaning find those good buy zones. You just got to wait 3 to 6 months, get that nice rally out, take your profit, and then wait to buy a dip again, or hold some of it in case it really does accelerate to the upside. But the fundamentals of this market, to keep it sustainable, it's tough when you start to get above $400 or $500 in value. So I would say that on a long-lasting basis, where it does find value is in those parameters, and I would expect it's probably going to be a nice range trade that's going to exist for at least the next 6 months to 12 months with Monero, versus something like with Ethereum or Bitcoin that could start a nice big trend either to the upside or downside. Should those start to really tank, I could see Monero testing support a little bit, but I think we've pretty much based. I don't really see it getting below 140 unless the whole crypto space falls out of bed. All right, let's go back to the Euro US dollar, see where we're at. Once again, this market is still hanging on its lows. So like I said before, dollar right now it's strong going into the weekend. I would expect this strength to persist. I can't see really why we would not maintain this strength. Let's look at the British pound real quick as we do one last lap around the world. British pound still hanging on its lows. It is just really not, it's not pressing it. Trading is not going on very much, but I mean, you can see the volumes are thin. Remember, all the markets are closed globally except for in the United States, and we only have another hour and 20 minutes for the currencies and the bond futures to be open before we have just the last hour of trading for the U.S. stock market. So momentum is still staying there as far as US dollar, that's not right. US dollar CHF. We can see that this one here is hovering just below its highs. Dollar strength still staying strong. US dollar JPY, obviously we know this one, balloon underwater, staying strong. We like this one to continue. This is the one, like I said, definitely look to buy dips, where we're very solid on this trend analysis. Australian dollar, US dollar, this one here, coming off its lows a little bit, not beat up as much as the other currencies versus the dollar. Once again, we do see a lot of bullish strength that remains in the Australian dollar. New Zealand dollar, US dollar, just a micro version of the Aussie right now, kind of trading in tandem. And then US dollar Canada, we'll take one more last look at this, coming off our lows, kind of quieting down. Like I said, I think that you're not going to see much follow through. If you do, I could see the dollar piercing newer highs versus some of these currency crosses, but only by a few pips. So I would be very cautious trying to press any trade right now. But remember that follow through is most likely to occur next week. But beware of Sunday's trade. So if you're not already in a trade, now is not the time to try and jump on a trend. I would wait until Sunday night. Don't don't be a gambler, be a trader, okay? Treat it as a business. So like for instance, I'm already long US dollar JPY. Now is not the time to buy into. Now, I'm not saying you should never buy into highs or sell into lows, but because of the weekend risk, who knows what's going to happen over the weekend? Things, even if they just slowly subside a little bit, and God forbid there's an oil comment, we could have these markets open extremely different on Sunday night. But we do have the Fed meeting going on next week, so we do have to be mindful of that. So, real quick, I'm going to ask you guys, let's see, do you have any questions about any markets out there, you guys that are listening? Let's see, on Twitch, we have no questions. YouTube, no questions. Do appreciate all of you that have been watching today, and also for the likes. Hopefully you guys have also shared this video with your friends. We would appreciate it, and if you haven't already, please subscribe as well. And with that, I think we're going to just go one last little piece of business here. Remember to check out my book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and paperback versions. And oh, real quickly, I'll show you also, if you want to check out the book, you go to forex-trading-unlock.com. Products, courses, and services. You come all the way down to High Probable Japanese Candlestick Patterns. And right here you can see a little video about the book. Then we have the book here where you can buy it, you can share it, you can preview it. So you can actually get a little taste of what's going on in that book as well. So once again, you have a nice weekend. Hope you enjoyed today's session. I'm Teddy Keckstedt from forex-trading-unlock.com. You guys have a great weekend, and we'll have some more material coming up for you this weekend and also